What's going on there? It's Wednesday, June 8th. I'm Frank Curzio. It's the Wall Street Unplugged podcast where I break down the headlines and tell you what's really moving these markets. So it's Wednesday. Today is Daniel Creech Day. That's what Wednesday is. Daniel Creech. Bring him in every Wednesday. Help answer some of your questions. Go back and forth discussing today's topics. Daniel, how's it going, man? How's everything?
It's going great, Frank. Thank you, sir. I like that. Daniel Creech Day. That's good. There's no place I'd rather be than right here doing the podcast.
And what do you do here again? I forget. Since you took off like 4 weeks.
A little bit of everything. Let's move past that. We got a busy schedule today. Are you kidding?
All right. Look, the big concerns right now in the market, right? You see, what I'm seeing, Daniel, is the past few trading sessions, the market wants to push lower, but then even with target warning again, it just, the market, you're seeing buyers come in here. Doesn't mean necessarily that we're at the bottom. And I don't believe we're truly at the bottom. I believe we're close. We can go lower, but now is definitely time to start picking away. That's what I've been doing for my own portfolio. That's what I was saying in the past 2 weeks of podcasts. We've been doing it with the portfolios and our newsletters. And even today, the market started down. And now it's like making its way up a little bit. NASDAQ's up today as we're taping this early on, around 10 o'clock. But the big concern is inflation. And we have the Fed meeting next week, I believe, and they will discuss, not discuss, but they're going to raise rates again, probably 50 basis points. And we need to see inflation moderating, and I'm not sure if we're seeing that. But what I am seeing right now with the Fed about to speak next week is the amount of articles coming out and everyone deflecting inflation like it's everyone else's fault. You know, it's not the Fed's fault. It's not Biden's fault. It's Russia's fault. It's everybody else's fault, which is funny. And that's all leading up to this because next week, again, they're preparing you, they're conditioning you in all the newspapers to show you that, hey, it's not really our fault. Again, there's all politics and stuff like that. But the bottom line is inflation is here. And it's definitely not transitory, which we know, right? You mentioned the Wall Street Journal, and you can read that in a minute where they said we should use a better word, transitory. But we need inflation to moderate, and that's where we are now. So what are your thoughts on it? Are we going to, from what I'm seeing with some of the data, yes. Other data, no. When we look at housing, yes. We look at Target and Walmart, yes. Right? First inflationary trends we've seen, Daniel. But when I look at oil and food prices, they're definitely going to go higher. So which is it? I mean, for me, I think we're almost there. But just because we're going to top out on inflation doesn't mean that's such a great thing. We need to come down sharply, don't we?
Absolutely, and for consumer prices. And when you say inflation has peaked or is getting close, I don't want to put words in your mouth. I think, are you referring to how the government measures inflation over time and things? You're not saying that gas is going to go down and rent's going to go down and stuff like that as far as inflation peaking, correct?
No, it's more about peaking. And this is important to understand because you may say, well, it's still expensive here. But in terms of the markets, that's what the markets want to see when the data is released. They don't want to see 8.5% inflation. They want to see it come down. And as you're seeing it moderate and come down, we're still going to, even if we go down, 20-25% here in prices, we're still going to be paying, $3 a gallon, which is a lot more than we were paying a year ago still. But as we come down, it puts a floor into the market, and a lot of stocks are pricing this inflationary environment down 25, 30, some down 50, 60%. And even Campbell came out today. Good numbers. Stock went up, but said we're expecting much more inflation going forward. Right? That's interesting because we were hoping a lot of companies reporting saying, hey, we're seeing that we're getting inflation under control because we heard these companies say that 9 months ago and 6 months ago that, hey, inflation's coming down, supply chain's concerned are easing. Now the companies reporting are saying that we're expecting a high inflationary environment still going forward over the next 12 months. And also we're still seeing supply chain concerns, which is a problem.
Yeah, absolutely. And to your point about, for our listeners, we try to have fun because in our business, and Frank and I talk about this a lot off camera and just when we're kicking around ideas and things, we live in a world where you want instant results. And I'll be the first to admit that. That's why cryptos are so much fun because you can make life-changing rewards in a year or less. Some of these tokens just do different crazy things in cryptos. Having said that, when we're dealing with a huge macro topic like inflation, it's going to take time to play out. And for us doing weekly podcasts and things like that, you doing every day, it's much harder. But you have to continue to tell people what's going on. But this is going to, it's a bummer to keep pounding the table on inflation, and we can only take so many victory laps. But just yesterday in the Wall Street Journal, just to bring everybody in, today in the Wall Street Journal, Janet Yellen is doing her political kindness of throwing other people under the bus. So what did she do before she was Treasury Secretary? She was the head of the Fed. Now Jerome Powell is there. And she says, quote, Given the global nature of these markets, or excuse me, that's the wrong quote. She says, so as Chair Powell indicated himself, both of us probably could have used a better term than transitory. She's referring to inflation. There's no question that we will have huge inflationary pressures. She now expects this to continue for a prolonged period of time. And she says it's unacceptable. And the last thing, here's where good highlighters come into play. She hopes that inflation comes down, Frank.
Hopes. I love that. I love when the Fed uses that word hope. It's such a piece of shit word that pisses me off. Hope. Like, this is the Fed.
This is the smartest people in the room.
Yeah, we
supposedly.
Hope. That is a terrible, terrible term. It's almost like going at war list to a general saying, hey, you know what? I hope they don't invade us. It's like, really? You hope? I mean, hope is not a strategy. That's not what we expect. That's not why the Fed officials make the money they make and then make millions of dollars speeches after they leave there and go to the Goldman Sachs of the world and every place else and make, tens of millions of dollars and stuff like that. But what frustrates me is, let's deal with the problem and stop the bullshit. Okay, Biden ran, and listen, Biden did his job. He got elected based on the policies that he said. And those policies were no more fossil fuels. We're getting rid of the Keystone Pipeline. We're cutting back on oil companies. They're going to cut back tremendously. Okay, that's what his constituents wants, and that's what he did. And that's fine, right? That's what they wanted. Just like when I say DeSantis that we don't want in Florida, the parents in Florida that live in Florida, we don't want our kids, our kindergartens, to learn about freaking sex and gender identification in kindergarten, first, second grade. And if they do, that's our job to teach them, not the teachers, right? That's your job as a politician, right? You're getting hired. Don't bullshit us now, right? Don't go on TV and say, well, it's Russia's fault and we expect a war in Russia and it's oil companies' fault. They should be drilling and, we're releasing federal permits. It's all bullshit. This is exactly what you wanted, and deal with it, because this is the inflation that comes with it. This is what happens when you deal with these problems. But just the deflecting, and I don't know why that's the playbook. It used to be the playbook, and I get it. It used to be the playbook before social media, where you could see everything everyone says their entire life in every single speech on YouTube or any other platform that you want, Instagram, Facebook, or whatever, right? Just go out there and say, hey, you know what? I messed up. Don't say, we probably shouldn't have used transitory. Or Biden saying, hey, you know what? It's not our fault. It's not my fault. There's inflation. Just take blame. It's okay. We make mistakes and learn from it. That's what people love. When you say, hey, you know what? I fucked up, but this is what I'm going to do to fix it. We love that. We love those stories, and Americans love that stories. But that's what hurt Trump too. Saying, oh, well, he never did anything wrong. He never did anything wrong. He did a ton of stuff right for the economy. But he was like, everybody loves me, the black community. No one's done more for the black community. There's done more for, the Puerto Rican community. It was this constant like, oh, I'm great, and nothing's my fault. And that's really what pisses off Americans, because we know you're full of shit. And now we're dealing with inflation across every level. And you were even getting fired up and cursing. I say, you should say that on a podcast and say, because it's true feelings. What I mean, it's true feelings. Like, come on, man. This is exactly the platform you ran on. And now you got what you wanted, right? So you're seeing it. And, well, okay, unfortunately, maybe you could say the war started or whatever. And who knows if it would have started with Trump or not, whatever. But you're at the helm. And when you're at the helm, it's your fault. I don't care if you're 1 year in, 3 years in, 4 years in, whatever, 7 years into your second term, right? So when you're the boss, it's your fault. That's it. You'll claim responsibility. It's under your watch, right? When you have a baseball team and you get in, you're a new coach and you have first 2 years, you inherit a shitty team. You're there for 2 years. That's your fault. If they're terrible those 2 years, it's your fault, right? That's the way it works. Don't deflect blame, because you're a leader, and that's not what leaders do. Leaders don't deflect, okay? They take responsibility and they fix problems, and you're a leader. That's why people follow you, because they trust you. And there's no trust in this system right now, which is pissing me off. And now what are we looking at? Inflation running wild. Not to have a massive rant here, but listen, we have to deal with it. For me, I truly believe, and based on Target, Walmart, you're seeing home price mortgage demands down its lowest level in 22 years with interest rates going higher. The Fed's going to continue to tighten. You're going to see it moderate. It doesn't mean it's going to come down tremendously, but when we see the data and you see moderation, that's going to be a sign of a bottom, where we can say, okay, it's not going to go higher than this, so it should only get better than this. And we're not at that point yet. We need to see. We're going to be there, I think, over the next month, and when the next round of data is going to be reported. But let's see. But from a stock standpoint or equity or your portfolios, that's what we need to see. Okay, it's not that, gas prices are going to go from $4 to $2 or $5 to $2, which is now the average close to $5. But if you top out and say, hey, they're not going to go higher than $5, just an example, right? Oil prices are going to go higher with the summer months, right? more demand, less supply. As they come down, if we're saying, well, 5 is a top, and then they go to 480, 450, that's a good sign. That's a great sign for inflation. That means inflation is coming down. Not so good for the oil companies, probably great for everything else in all the businesses. And that's what we need to look forward to. But we're going to see it. We're seeing it with Target. We're seeing a lot of consumers pull back. And for the first time, with Target saying we need to get rid of our inventory and sell it at much lower prices. That's the first deflationary event that I've seen in at least the last 24 months, probably longer, which is good news.
Yeah, and that is good news. And as we talk about what inflationary environments mean and things like that, you're going to have to see that, and you will, and you'll watch that unfold and play out. What's very frustrating to me, and I was ranting to you off camera, is the narrative that is trying to surround people to be okay with misery. And what I mean by that is you have two choices. You can accept what you're just told and blindly agree or disagree with that, or you can, do some data research and figure it out. My big point is that if you look at the narrative across the board, which I've talked about with Yellen in the Wall Street Journal, just yesterday in CNN, Commerce Secretary says the brutal reality is there isn't very much more to be done on gas prices. You have the leading superpower of the world, government, and the highest rankings from the president to everybody else telling you there is nothing that can be done to lower gas prices. And that is 100% untrue. Mm-hmm. So as an investor and as me, and this podcast helps, the microphone helps, you've talked about this in the past, how it's a good form of therapy. You can either be frustrated that the policies are choosing to inflict harm on everybody, or you can invest to try to make some of that back. How do you do that? Well, if you don't believe me that we can drill for more oil in a safe manner like we just did a few years ago and have prices much lower, that's fine. If you want to participate, buy oil companies. That's going to help offset. I just filled up a little bit over half a tank, and it was 70 Florida dollars. Mm-hmm. 70. Mm-hmm. Thanks, Biden, for half a tank.
Yeah.
That's crazy. And so you see these articles about...
It's not his fault, though. It's Russia's fault.
And the Commerce Secretary and everything is blame Putin. Exactly. And that's what, and the takeaway there, if I can provide value or hope to provide value for listeners, other than just getting this off my chest, is that until something fundamental changes, don't expect a different result. My point is, don't expect prices to come down in the sense of the reality of inflation when you still have the government blaming big oil for gas prices and Putin for gas prices. You have them blaming meat producers for high food prices. And when you have the government attacking and blaming everybody else, like Frank just said, that is just setting the table. You can ignore everything they say after that. All you need to know is take away is, hey, they're not going to do anything to fix the problem. You can increase manufacturing here. You can incentivize businesses to open up here. You can incentivize all of that. And you're choosing not to. That's okay. I mean, it's not okay in my opinion, but it's okay to be done. And so that's what you have to think about. So when you see these stories about, hey, we hope inflation's coming down, they're telling you we're not doing anything. It's going to get worse before it gets better. You're seeing that again. Like I said, the Commerce Secretary saying the same thing. All that is 100% false. So nothing is changing in that sense. And with this recent rally, just to continue real quick here, and I know we're segueing, but we're obviously in a bear market. Market indices are getting hammered, and we're trying to fight back. But I would argue until the Fed changes its course on being hawkish, you have to use the rips to sell out of stocks that you want to unwind on and look for better opportunity. That's the new nature of environment in a bear market. And the comfort there is that you're going to get a lot of opportunity in bear markets. It's just a disappointing thing to buy and see things continue to go down. That's just the way investing works, though. So
yeah. And just to deflect everything on Putin, I can tell you the difference between Putin and our officials here. Putin's very predictable. He told Ukraine, don't go near Crimea, and don't go near NATO. If you do, we're going to invade you. And Ukraine did both. And now they're in a war, right? So it was very predictable. Ukraine was like, hey, I think we got everyone in our pocket now, which they do, even though they're listed, not my opinion, they're listed as one of the most corrupt nations. Almost every one of their elections were corrupt. If you go back and look, we hated them, right? We hated Ukraine just until Russia invaded them. Now they're like seen as the greatest place ever. And I'm not saying that in a bad way. There's, great people there, but it's a nation that when it comes to politics, same with China, that you cannot trust. They're going to say one thing and do another, which I guess you could say that in politics a lot of places, but at least that was predictable. And to throw everything, this is Putin's fault, it's a joke. All right, we have to take responsibility for it. We have the technology to drill more oil, to be the large producer in the world, which I think we're second or third now. We were first for a little while. And we could take that money and take 15, 20% of those profits and throw it into alternative energy, green technology, whatever we want to do. But to see where prices are, this is not sustainable for the average American. It's not. I mean, I'm changing. Like, we drive my daughter to Georgia really quick. We drive my daughter to Georgia, which is 35 minutes away, right? So where's north you can go for Georgia border on the East Coast in Amelia Island? I fill up now, my wife and I, we make sure that we always fill up in Georgia because it's 15% cheaper than it is here in Georgia. Just even though, again, state tax, whatever the reason why, but it's that's a big difference, right? So if it's, close to $5 here, it would be $4.40 there, which is a significant difference. And because we're there 3 times a week, 4 times a week, and that's, most of our drive. But, people are changing their habits, and they are. And that's where sentiment changes. And that's why it happened so quick with Target, so quick with Walmart. They're like, holy cow. I just can't believe that people aren't, in the last month of that quarter, that it was like a light switch that people just closed their wallets and not buying discretionary things anymore. And now they shifted their products and everything. But you're seeing it now. You're seeing prices go up, continue to go up, but to the point where you can only have so much pricing power, right? The cure for inflation is going to be higher prices because eventually people are going to be like, okay, I'm not going to be paying these high prices and they got to come down. That's what you're seeing. You're seeing the average retailer have 35% more inventory than they had last year, and they have to just get rid of it at fire sale prices. That's what we need to see. Is it painful? Yes. The good news is Target said that the stock went down 8% in pre-market because you have those high-frequency trading firms that have access to that market, not you. I think it finished the day down like 2% or whatever. Yeah. So that's because it went down so much when they missed a quarter. But it tells you that the bottom is pretty close here, but we need to see inflation moderate. We need to take care of the oil problem. Hopefully we do sooner rather than later. Now, I think we beat that to death and probably talked about that.
Yeah, let's get on to bashing another government entity that might do something successful.
I mean, the chairman of the Commodity Futures Trading Commission, CFTC, that's Gary Gensler, is speaking at a major conference, which is the Piper Sandler's Global Exchange Conference. It's a major conference and a big deal today because this is like for the exchanges. And Gary Gensler is suggesting changes in the current system, the payment of order flows, which brokers send their orders to the market makers in exchange for payments. So he says there may be a conflict of interest for the brokers and that too much power is concentrated in a handful of market makers. And he's likely to float proposals today that would diminish influence of the wholesale market makers like Virtu. If you didn't hear Virtu and Citadel Securities, Virtu is very, very huge. And we'll get to that in a minute because they are starting a large crypto exchange with Citadel. But what they're doing is zero commissions means that, they're making it up in pricing, right? With the market makers. I don't know if Gary, and I'm going to call him Gary, it has Gary, Gensler has a leg to stand on here because you're about the consumer, right? You're arguing the consumer. It's better for the consumer when they're paying zero commissions. They don't care about paying a couple of cents or whatever, but that zero commissions led to the biggest boom of volatility that we've ever seen, especially right after COVID. It allowed tons of retail investors to start trading the Robinhoods, the Coinbases and stuff like that, which increased volume incredibly. And now we're seeing that come down a little bit, but I don't know if this is grandstanding or if anything's really going to happen from this, but what are you going to do? Because if you eliminate that spread of the money that these guys make, then you're going to, what's that saying for the brokerage firms, right? Because you're going to have to charge them. You're going to have to go back to charging commissions. So, which is going to result in less trading, less volatility is worse for the markets. I'm not too sure. I think they're making a bigger deal about this than it is. I think it's going to be a lot of talk, but if they do make a big deal about it, it's important. But this is the big takeaway here, because at this conference, by the way, Robinhood CEO is talking, Virtu CEO is talking, Charles Schwab CEO, CME chair is going to be there, International Exchange chair, the NASDAQ CEO, Galaxy Digital, Mike Novogratz is going to be there. This is a very, very big conference and people are concerned, right? It's very, very big. I will say that Citadel and Virtu, though, which, you know about, we discussed off air, that this led to Bitcoin going from about 29,000 to 31,000. It's around 30,600 right now, but it pushed over 30,000 again because Citadel is partnering with Schwab Fidelity. That's going to build a high-frequency crypto exchange and marketplace. Yet Sequoia and Paradigm, these are massive, massive investors, guys, are going to be investors in this new platform. They invested over $1 billion together. They also expected a consortium of wealth managers, market makers, and industry leaders to join the marketplace ahead of its launch. But I think these guys are taking it seriously, getting all in on crypto now and building this, platform. They call it a marketplace, not necessarily exchange, because Ken Griffin, as you know, wasn't the biggest fan of crypto long ago, but it seems like now he is. I don't know if it's because he knows he can make money off it because it's a $2 trillion market, or if he truly believes in crypto, but he did a complete 180.
Yeah, I would think he sees it as an opportunity, and I don't blame him for that. I think that's good. Similar to the way the Jamie Dimon, CEO of JP Morgan Chase, has said, hey, I'm not a fan of Bitcoin. I could care less about it. I'm paraphrasing. But clients want it, and I'm not going to tell clients what to do. JP Morgan come out just last week when Bitcoin was around 30,000, said that, it had at least 30 or 35% upside from there. The great thing about Citadel and Virtue getting into the high-frequency traders and market makers, getting into crypto and doing this, is it just shows you the theme that we've been reoccurring and trying to help people along the way. And we don't want to come across as just cheerleaders and ignore bad news or negative news. Bear markets suck. They're a reality. I've talked about being down on Galaxy Digital and personally as a position along with subscribers. The point to that is just to show the reoccurring, hey, if you have a bear market and prices go down, but the only thing that's changed is the price and the inner workings and the money flow and the development and the resources continue to come in, the odds are in your favor if it's only a matter of time until prices catch up with all that behavior. So it's good to see those big players get into crypto because demand and opportunity. That being said, quickly back to the SEC potential rule changes. This is a huge deal in my opinion because it's going to help the individual investor. I'm going to parlay or overlay a couple of stories. So the SEC changes was in the Wall Street Journal this week. And anytime, so the average individual investor, I take your point, Frank, a lot of people were drawn to that 0% commission or zero fees. And that's great, but nothing is free. So if that influx of traders at zero commission, only to go to these high frequency hedge traders who are making tons of money off the backs of those. It's basically playing poker with seeing the other person's cards. It's a guarantee win. If that leads to more volatility, I think that's a bigger risk and offset versus the lower commissions. Because before this, and I'm going off memory here, so I have full disclosure, I could be wrong, but TD Ameritrade, Schwab's, different things, they were what, $5, $7 a trade before zero, and then they lowered it to $2 or $3. So let's get rid of high frequency trading real quick and say the Citadels and all those are not. You have to compete because what the SEC potential changes are talking about is that market orders, which don't have you just want to go buy it at whatever the market price is. A lot of those from individuals go to these market makers, Citadel and Virtue. Everything else goes to the NASDAQ and different exchanges where they have to compete to fill those orders. That's what you want in any business. You want competition because that's going to overall lower prices. The point to that is that even if you have to go back to $2 to $3 per trade in commission, so you want to buy 1,000 shares, it's going to cost you $2. I don't think that's going to deter enough people. You don't have to go back to $7, $8, $10 trades like it used to be, or even before discounting trades, you had percentages of trades. When I first started in the brokerage business, hell, if you wanted to buy X amount of stock, they basically looked at how much you were buying and charged you off that.
Even now, full service.
Talk about a hack.
1.5%. Yeah.
So I'm not saying nothing has been good as bringing the price down, but this isn't the only way. Don't fall for, well, this is the only way it can be done. And of course, you're going to get pushback because, Frank, if you and I have a multi-billion-dollar printing operation and somebody else wants to change it, where do you think we're going to stand on that? Well, hell no. You know what I mean? Overall, I think it's great. I don't think the SEC is going to do it. I think they're too big of a government entity to do anything right. I think they're terrible like every other huge government entity, but it's good to see them dangle a carrot in front of your eyes every once in a while and act like they give a fly in Florida, Frank.
I know, it's true. I mean, it's just, the way the system is E-Trade, you place in a trade. You don't know the relationship between E-Trade and Citadel, E-Trade, and some of these other high-frequency firms. You don't know how much money they make. You don't know. I think there just needs to be a little bit more disclosure that you're not really screwing the customer. The customer's not seeing it because they're buying the stock and maybe a few pennies here or a 2 to 3% difference doesn't really matter to you, or 2% difference in the price. And it's probably less than that, even 1%. But when you're talking about, hundreds of millions of shares trading, on certain stocks, even a billion shares trading, it does add up. So just maybe some more clarity on it because there's no clarity in this whole business in high frequency trading. I mean, it's a bunch of front running. The high frequency trading, and you're looking at some of these firms and the biggest, they're not looking at fundamentals. They're not looking, hey, this is a great management team. This is a good business, right? And you could say that the trading firms and fine. If you're trading firms, that's okay. But these guys are getting in and out of trades like in 1 second based on the inaccuracies of the market, and they're taking advantage of it. And that, to me, is front running. So when you're looking at these firms, it is front running. It is, you'll see these guys get in and get out for everybody else. The reason why stock will open up and report bad earnings. Look at Netflix. Reported bad earnings. It was down like 17, 18% and finished down like 38% that day, right? Because these guys are able to get in and out of these trades even before the market opens, before, after it closes. You're seeing, these movements after markets and before markets. And you have to level the playing field. It should be a level playing field. But I don't think anything is going to happen of this, but it is interesting to see the move here from Citadel into crypto. And it's important to understand that because people, when you look at Bitcoin, this is why I'm so bullish on Bitcoin. I don't know where it's going to be. In 3 months from now, it could be 20,000. I have no idea. I just know over time, this thing's going to be well over 100,000. And over time, it could be 2 years, 4 years, 5 years, 6 years. And I'm saying that because of the math and because of the data. If you're looking at Citadel, I just announced the companies, Schwab, Fidelity, Citadel, Sequoia, and Paradigm. Paradigm is very, very big investing in tons of cryptos in the crypto space. They're also expanding consortium wealth managers, market makers, industry leaders. That's what they're saying, right? So you're looking at, and then you come down to Fidelity. Fidelity has $4 trillion assets under management. Maybe 25%, $1 trillion is in retirement funds, 401ks. You take 10% of that, that's $100 billion. They said, what was it, 20%, Daniel, that they were going to allow for people to use 20%?
Oh, to allocate in 401k?
Yeah, we'll say if they use 10%. I think 20% is a little bit crazy, as I said.
Well, that was the high water mark.
That was the high water mark. But let's say if it's 10%, that's $100 billion. That's close to 15% of Bitcoin's market cap. That's just from Fidelity. BlackRock has 10 trillion. Vanguard has over 8 trillion. State Street has close to 4 trillion. And when Fidelity opens up that door, it's BlackRock, Vanguard, State Street, they all have to follow. Because if they don't follow, and that's what these companies are realizing, it's what JP Morgan's realizing, it's what Citadel's realizing, all these guys that hated cryptos realizing that if we don't open up this door, our customers are going to leave and go to places that offer this. And they are going to leave, and you're going to see outflows from these places into Fidelity because they're going to want to invest in crypto because it's very, very exciting. That's where they want to speculate. And when you speculate in this money, the returns could be 30x, 50x, 100x, which we've seen in almost all the top 100 cryptos at one time or another, which you cannot see those gains anymore. People are wondering why the public markets are shrinking and not as many companies are going public. Why? With all the regulation, all the bullshit, all the sells, all this SPACs, all this garbage where you don't have to disclose stuff, why don't you stay private? And then you have security tokens, which opens the doors where you can trade these private companies like ours that are private companies that trade publicly. Where you could buy and sell our shares based on what we're doing, right? So, it's less liquid, but, we haven't gotten hit nearly as much as the rest of the market because, we're not as liquid. But, we are going to have more liquidity. It's going to be building up that market. There's a lot to be said of this. But the takeaway is this, guys. Bitcoin is here. It's here to stay. It's a massive market. And all the institutions have yet to come in. That's why that Biden announcement executive order was such a big deal. At least he announced it, which now the framework is in place. You're seeing more and more framework, more and more politicians come out and say, hey, we're going to provide the framework behind this. When they do, that's when you're going to see institutional money coming in. And the institutional money is in the trillions of dollars. So if you're a Bitcoin fan and say, oh, everything should be decentralized and off platforms, no regulation or whatever. If you want that, there's no way you could think that Bitcoin's going to 100,000. The way it goes to 100,000 is by getting the big money in, which is all this retirement accounts, talking trillions and trillions of dollars. What does Bitcoin have, a $600 billion market cap or something? So this is where the money's flowing into. It's coming in. Fidelity announced it. You're going to see BlackRock, Vanguard, State Street. All these guys are going to announce it. They're going to have crypto as an alternative investment for retirees that you could invest in. The funds are coming. That's when you're going to see this explode. I don't know when it's going to happen. We're in a bear market. We're risk off. People are deleveraging right now, and I get it. But with Bitcoin down as much as it is, 50% of its highs, now's the time. Put a little bit in. Don't go all in. Start looking at some of these cryptos that are great innovations, great companies. That's what we're doing. That's what we're going to as well. That's where the puck is going. And you see it with all these, the Jamie Dimons, the Ken Griffiths that hated this stuff, are now saying, wait a minute. Okay, this stuff is for real. Whether they believe it's real or not, they know that their clients want it and they're going to offer it, which means trillions and trillions are going to flow into this industry over the next few years. And where do you think cryptos, Bitcoin, Ethereum, where do you think they're going to go? They're going to go a lot higher. That's why you need to get into it.
Agreed. Yeah, just scale into it. I mean, if you're worried about the price volatility, just buy a little bit less. And like you said in the past, if you have exposure now and it goes up, great, you get to participate. Yeah, you can kick yourself if you didn't buy more. If it goes down, you can look to scale into it as long as your thesis doesn't change. Just That's just the nature of environment. That's the gray area. That's the profession we've chosen. So you got to get comfortable with that, and you just got to do it. You learn by doing. Yeah, you'll see prices move against you. Seeing red sucks when you open your brokerage account, Frank, but as long as your thesis is intact, you can continue to manage and plug away because the inner working, the big tailwinds, the global tailwinds are working in your favor for higher prices. So I think that's great. It's good to be bullish. And like I said, bear markets in stocks and commodities or Bitcoin or whatever is when you really make your money. So build your positions, and then the next run that's cyclical, cash out some and take some off the table, and then rinse and repeat.
No, and just for the record, guys, we're seeing a massive bear market, right? A lot of capital, getting wiped out, and yet you're seeing a ton of money, billions going to the metaverse. Ethereum just announced, Ethereum NFT game Illuvium sells over 72 million digital land plots. This is from like a day or two ago. Where the land plot is going to provide various benefits in an upcoming PC and Mac game due out later this year. I mean, we're in TCG world. Our deal there. You're seeing tons of money flow into NFTs, metaverse. Even Apple talk about, fintech and where they're going. This is where the innovation is taking place. And if this was a strong market right now, you'd see just so many of these industries within crypto exploding right now. But the fact is a big deleveraging taking place. The Fed's tightening. Once that ends, which I think is going to be at the end of this year, the Fed's going to say, okay, well, we're seeing inflation moderate. That's why it's important, because if it moderates and starts coming down, the Fed could say, you know what, we're not going to tighten as aggressive. We're going to be easy. And that's when you're going to see the markets really, really take off. Really, really take off from here. And that's what we need to see. And that's going to be sometime probably next year, if I had to guess, early next year. And then, when it comes to crypto and the amount of money that is going to flow in, you think it's billions and billions now in this terrible market. Think about if it's a good market. That's when you're going to see investments come into all these new innovations. But the fact that you still see this money coming in this market, Daniel, is absolutely impressive. It's amazing. You were able to raise money for our real estate purchase in TCG world, if you think it's going to be the greatest open metaverse 4K around, which is open in September. We're very, very excited about that deal, and more people keep signing on to that platform. But this is where, I say it a lot, where the puck is going. This is where the money's going right now. The big institutional money is going, and you should be investing in it because a lot of these things are down significantly, and it's giving you a great opportunity to invest in this thing over the long term. So I'd position accordingly. Absolutely.
And like you just said, we're not going to get out of these bear market rallies or bear market or major headwinds for lower indice prices across the board until the Fed changes their tune on rates. So until then, just keep in mind that we're in a different environment than what we've been in. So that's fine. It doesn't mean it's bad. It doesn't mean you can't play or make money. It just means that that's the most important macro point you can think of. And just continue listening to us for 6 months, and we'll navigate you through there until they finally do something. Hopefully we'll be able to make you guys money if you listen to us. Oh, no, we can't. Oil, hey, we got some losers, but oil and commodities is fine. And those are going to continue to do well, and we'll take advantage of them. Part of our portfolio is holding up much, much better than the markets. We did stop out like everybody else, but that's what we're here for. Help you guys out. Questions, comments, for email, FrankCurzioResearch.com or Daniel at CurzioResearch.com. I love when he says it instead of me. But Daniel, thanks so much for coming in. I really appreciate it. All right. Cheers, everybody. All right, guys. That's it for us. And we'll see you tomorrow. Take care.